Hello everyone, Theunis Kreuger here. As always, I just want to check if you guys can hear me, see me. Last time a button wasn't properly connected here, or button wasn't pressed, so they couldn't see my screen, so they could just see the webcam. Right, can you guys see the screen? Let me see, I see. Morrison, it's only you. You're the only attendant here. Right. Can you hear me? Can you see the screen? Ah, excellent stuff. Yeah. Webinar that's we actually can talk, but still um, even though you're the only one here, this is being recorded, and sometimes people ask opinions, and then I can just refer them to this. So I'm still going to handle this just as a normal webinar, even though it's only the two of us here. But if you have any questions, please ask. I've got a presentation. We can look at a couple of live trades. I'm going to give you a couple of opinions, and that's the interesting thing about an opinion is there's a lot of them out there. You can look at the same facts, and 10 different people will have 10 different opinions. So whatever opinion you hear here today is just my opinion, based on what I know, what I think. An interesting thing about opinions is also they change as you get information. So as new information comes out, people realize, okay, their opinion or what they thought was going to happen is not correct, and they have to adjust. So that's just one of the facts. Right. So let's jump through this. Before we begin, do you have any specific information or any question that you want to ask? Mawson, am I pronouncing it correct? Any questions that you want to ask, just for interesting sake, before I start? Can you hear me? Can you see me? Are you just a shy guy? Are you just shy? Okay. Right, then I'm going to start. It seems you don't have any specific questions. Please, if you have questions, just pop up there. Right. I first, before I'm going to begin looking at the live analysis, I just want to go and show you a couple of good articles and places. Fundamental analysis has its place, definitely, especially with longer term charts, dailies, monthlies, weeklies, monthlies. It is important to know, what is happening in the news. When you get to more short-term charts, 4 hours, 1 hour lower, then the big news is not so important because there's trends within trends in those smaller time frames. So we're going to just trade the trends. With the larger time frames, fundamental analysis is definitely important. So what we're going to do now is just going to go to our website. The first thing that I want to just mention is articles. The head of our education wrote a very interesting article, COVID-19, the coronavirus, and it's a short and powerful summary of what is happening. He calls it the ugly, the bad, the good, and the loony. Very interesting. So it just gives you a broad overview. And then what he does is he analyzes a trade based on that. So please feel free. This is just going to build your background to go and look at that video or that template, that article. Right, to give an idea, to get a very short idea. Right, if you go back to the website, every single day it's updated. There's lots of daily market analysis. We've got a whole team of expert guys, economists that focus specifically on the broader news that's happening. And there's a couple of interesting articles about the coronavirus. If you scroll down, you'll see the impact is obviously directly is discussed already, but there's a few interesting ones. For instance, here our chief market strategist Hussein Said has an article here about what the impact is, and it's a little bit more detail. So it gives you some figures, and he discusses a few things that's very important. Now, the reason why fundamental analysis is important with the longer time frame is especially the huge guys, the hedge funds. These guys have huge portfolios, so they can't very quickly take decisions. So they need to listen to this. They take decisions with their huge portfolios that takes time, sometimes weeks, to implement because of the enormous amount of positions they have and the different instruments they are controlling there. So with the smaller guys, this is not so important, but in the chart, we will see how these guys start moving based on the news they get. So if you are interested and you listen to the news, then you get the perspective of the big guys, of the big funds, even governments, how they take decisions, their departments, their finance departments, economic specialists, right? So you're free. We try to make it easy to understand as possible. It gives you background, gives you some depth to go read these every day and keep updated with what is happening. Right, but for us as traders, I'm more a technical analyst. So from a technical analysis perspective, we want to see what happens on the chart. We need to see this. And what I've done, just for interesting sake, is I've gotten some long-term charts. This is the S&P 500 last cap index from 1925 until present. I want you to observe something interesting, or just an interesting scenario. If you were staying in a place where you were very, very isolated, so you didn't even know what happened. You didn't even get any news about world wars. You got no news. You were totally isolated. But you had access to charts, and you could study the charts. You could see what people are doing. Then even though you don't know why things are happening, you would be able to actually make net profit over a series of trades if you understand what technical analysis is about. It's about looking for trends, language of the market, trends, uptrends, downtrends, ranging markets. And it can just be very, very effectively illustrated with this chart. This is from 1925. So the whole 19 until 1945 World Wars incorporated in this as well. We can look in a little bit more detail now. We're going to zoom in. I just want you to see this is a line chart, so it's very simple, the structure of the market. And you can see uptrends, downtrends, ranging markets, uptrends, ranging sometime. And even though you didn't know anything, had any news, you would be able to, if you understand the language of the market, if you're looking for early stages of the next trend, you would be able to take positions and profit from this. This is the power of fundamental or technical analysis of the language of the market. It opens up worlds for you. So this is just one. And this is another one, the NASDAQ from 1978 to present. As you can see, trends within trends. There's a nice uptrend, there's a short downtrend, and then the market just keeps on trending, right? With occasional ranging markets. So if you know the language of the market, then you can take decisions based on what you see here. Right, so that is just very important for me to emphasize. Okay, Maureen says coronavirus caused me to become a margin call. Whoa. You must really contact me. My email, I'll put it up again so we can make an appointment to discuss this, because I'd like to analyze that trade. When you make a trade and you have unnecessary losses, you have losses, it's very important to make that mistake or to make that valuable by learning from it. So what we do is we go look in the chart, we see what was your reasoning, what was your method. Consistency in trading is very, very important. You need a simple, well-defined method, good risk management, or taking calculated risk, good management, and you need to practice that. So if you are telling me you had a margin call based on this, then you really need to go and look at why that happened, so that you can learn and grow and it doesn't happen again, right? So this is the chart, and now I just want to jump to okay, where's the charts now? Okay, I'm just gonna open it up quick. I really want to check with this chart specifically so I can show you how important this language of the market is. Right, let's open both of them up. Right, so let's zoom in a little bit here. I want you to understand this before we go to the live charts. It's just going to make more sense. Right, as you can see, the definition of an uptrend is higher tops and bottoms. You can see here higher tops and bottoms. So there was already going, so we couldn't do anything there. Then the market structure changed. It started making lower tops, lower bottoms. If you took a calculated risk there, you made a very, very nice profit there. The market structure changed again. There was some turmoil. If you took a position there, you might have had a small profit or loss. And then again, another position, depending on what method you use. What I want to show you is if you follow this chart, you'll see there's enough uptrends, continuing uptrends, downtrends, now and then a ranging market for you over a series of trades to make a net profit. All right, so even though there was even a world war included in this, many recessions over the time, then you would have been able to take a calculated risk, and there was enough trends here, trendings, for you to make a net profit over a series of trades. That is the power of technical analysis, to see what people are actually doing. Right. So let's close this one and look at the other one. And you see exactly the same thing here. It's a little bit more. It's from 1978. If you zoom in a little bit, you'll see there is trends inside trends there, up, depending on how you interpret it. The bigger waves or the smaller waves, there was opportunities for you to trade here. Right, some nice trends there. The objective of any trader is to make a net profit over a series of trades. We never try to predict the market. We don't know what's going to happen. We look at the structure of the market and we take calculated risks, right? So even though some big event was involved in this time periods, it would still have allowed you to make a net profit over a series of trades, right? So blowing an account is not necessary. Right, so what I want to do, we call this a live analysis. So that's the purpose of this thing. The coronavirus started in about December. Let's draw a line here. In about December, the middle of December, China reported that they had some problems with the illness. It was spreading very fast. And as you know, what we are looking at is simply supply and demand. People buying and selling. In this case, it's a Euro USD daily chart. So people are buying and selling. And if anything happens, any news comes out that affects the buyers and they stop buying, then the sellers, there's more sellers in the market than buyers, and the price has to come down, right? If anything happens that causes the suppliers, the sellers, to get out, then there's more buyers than sellers, and then the price goes up. So let's evaluate. Let's do a live analysis of what happened here. Even though we didn't know, if you didn't know what was happening, you could see clearly that there was a structural change there. There was an uptrend. And what is interesting for me is this is an exercise I give all the guys that I start training with. I tell them, go back to the old charts. You take off these two scrolly buttons, and you can scroll back, and then you can identify, identify trends. Right. So especially I love the 4 hours, because normally you can, in a week, the situations, the scenarios plays out, and you've got your profit. So the swap cost, the holding cost is much less. But if you do trade longer term, then you will see, even before that, the market goes up and down. It's a trending, people are buying and selling for different reasons. But what we want specifically to see at this stage is this time. Coronavirus was announced here. People didn't know in the beginning what was the impact going to be. But yeah, you can see there was a structural change here. From higher tops to higher bottoms, something went. The markets reacted, people reacted, and the market definitely, the people realized this is going to affect the markets. This is going to affect people, the market in different ways. In the beginning, what you see is people, the buyers stopped, and this caused the price to go down. There was more sellers than buyers in the market. And then at some stage here in February, this was after China, especially through a lot of measures, um, were able to stop the the exponential growth of that virus or and the economy, and they could send their people. And this time, what happened is they say they closed, or not closed, yeah, they closed many of their factories just to contain the virus. So, and you can see this down causing this supply. Um, Guys weren't buying anymore. Everybody was worried what's going to happen, and there was a down move, right? And then what happened is that China started coming online again. They started producing, and people weren't sure. And now there was a lot of buying. People were wondering, um, are they going to, are there going to be enough of different things? So people started buying stuff and everything, and for whatever reason, different people, different reasons. Remember, this is one of the most the one of the currency pairs that's traded the most. You can see there was a spike in demand there. Lots of guys coming in. And like I said, we will never know. There's so many people involved in the markets for different reasons. We will never know all the reasons, but we can see what the effect is. We can take a position based on this. I'm highlighting this for a reason. I'm going to swap to the 4-hour now, so that so you can see, even for a normal retail trader, how the opportunities are there. So, and then obviously what happened is we can see there's another structural change, and very, very emotional, and people aren't sure what's going to be the impact. What people realized is that the sickness is one thing. People, to be able to contain the spread of the sickness, people are isolated. Businesses can't do their business. That has a drastic impact on people's income, what they can earn. Businesses that might have been well, but marginally off, might have cash flow problems now, and and get into a crisis. Even businesses that had buffers, that had some, was strong, had big asset base, they might survive, or they will survive, but they're definitely gonna have an issue, with cash flow, because they had a whole time where they had no income or little income. Right. So this is causing people to doubt and wonder what is going on. So, and in a sense, the market warns you here. These huge moves, they warns you something heavy is going is on, big waves. Now, if we are trader, if you are a trader and you are not a master trader, you know your foundation is very, very solid. Um, your understanding of this structure of the market, you've practiced it in your muscle memory, is very, very deep. You really respect this with every single trade you make. You take a calculated risk and you manage that risk. Then if you are like that, then you can trade in any markets, right? So, but if you're not like that, then you're looking for trouble. This is like if there's a tsunami, on the ocean, huge waves there. There's only a limited amount of guys that can trade those waves. But if you wait and let them settle, then normal guys can trade the lower waves, the smaller waves. So after time. So in areas like this, the market is warning you. If you don't know what you're doing, just be calm. So that's why I'm going to go to the 4-hour now. The fractal nature of the charts makes it possible in lower time frames to get opportunities, and that's one of the big benefits we have. So I'll show you a little bit later. I just want to finish with this one. And now the market is going down. What the guys realize in the meantime is it's not just isolation. The business is not being able to produce, but after that, what's going to happen is people are cautious. For instance, in China, after they started normalizing, the factories started producing, but now the rest of the world is in isolation. Now there's no demand anymore. So the factories are working, but they have to cut down production because the orders from the rest of the world. China is really a massive export country, lots of factories and everything. So, but they must produce. They need sellers for those. They need buyers for those products. If there's no buyers, they have to cut down on on what they're producing, and that's causing sort of like a second knock-on effect, a second economic effect that is going to ripple through, through the markets of the rest of the world as well. After the um, after the after the quarantine time, when people start becoming economically active again, the effect, many people might have lost their job, and now they can't buy anymore, so much anymore, and that's going to take a while to ripple through the markets, and we'll be able to follow the supply and demand, how it predicts, how it shows it on the charts, right? And this is very important for me. This is live. This is what you're seeing here, is people buying and selling now. So this live price is live. This is what people actually did, not rumors, not news coming out and afterwards you find out, okay, but there's some more news and you change your opinion. This stays like this forever. That's why I showed you that long-term chart from the 1900s up until now. That is the chart. That is the prices that was recorded, and it will not change, right? It only changes every day, the live, and then it's recorded and then it's done. So that makes it very, very powerful. Right. I see there's no questions. There's still it's only one. Okay. It seems like it's just interesting. I note that when you're talking about trading and trading techniques and methods and stuff, then yeah, there's a lot of people listening. But when we talk about other things, the news, then there's not so many people interested. So that's an interesting observation. But for me, the two is connected. I put more of an emphasis on the technical analysis because we outline so mostly retail traders. So the fundamental analysis is interesting, but it's not so important. The structure of the market is the most important thing. It incorporates, discounts all the news, because you can see that reflects what people are doing. Even the ones that have news before the general public, you can see what positions they are taking. Right. So there's just one currency pair. So now I'm going to go to the 4-hour, and you will see how many interesting opportunities there is. Even though we were not sure what happens in the news, let's just go back to there in December. Even though we didn't know how serious the situation was, there was a clear up movement and down movement there. So there was an early stage of a next trend, break even or a small profit trade there. There was a bit of a bump, it didn't make a decent trend there, and then the market changed, and there is a decent trend there, early stage of a next trend, of a new possible trend. And this is the way I tell guys when they start training, is to get them to sort out their foundation, is to see, even though we don't know what's going to happen, we can see the market warns us. The supply and demand action warns us of structural changes, and we can take calculated risks there. So there was quite a lot of opportunities here where there was opportunity for profit. I'm just marking them out here quickly. So that's the overall trend, and this there was on the 4 hours even more opportunities on the lower time frames, but there was opportunities to take calculated risks based on this market structure, right? So I think what we're going to do next is look at this was a currency pair. I'm going to look at one of the indexes, show you exactly the same. Let's look at the S&P. Right, the reason why I'm staying on the line charts is we're not going to discuss entries and exits here. I just want you to see the structure of the market in action, right, and how powerful that can be. Right, this is a 4-hour chart. Again, let's just mark around about December. I think we were in December. Let's go to the dailies just to mark it well. Right, let's say about middle of December. When China reported this, then everybody didn't know how serious it's going to be. And here you can see some suspicions, some people taking, causing a reaction or taking some reaction in the market. And then when the full impact hit, we were the market structure changed drastically, right? And there you have your downtrend. It's a downtrend. It's changing. It's a ranging market at this stage, and very, very interesting times we live in. Right. So there was an opportunity on the. This is a daily, and I'm again going to the 4 hourly. I want to stick to the higher time frames, so as you can see opportunities that is here. Right. So when you overlay this, there was a bit of a delay, and there was another uptrend. There the structure changed, downtrend, and then again a structure change here to an uptrend. And guys, this takes practice. But once you start seeing this, then you start seeing a lot of opportunities. Right. Inside that day trend, you've got your 4 hourly trends. So there was a structure change. You made some profit there. There was break even or perhaps a losing trade there. And then there was your early stage of the next trend and a deep trend, you know, nice lot of profit lying there. There's your early stage of your next trend. And if you put your stop losses at a proper place, just out of reach of the market, you would still be in a position there. Although it's not an uptrend anymore, so I would get out of this trade. The market is ranging in this stage. Right. So the idea with this is not you know, to take trades at this stage. It's just to see the structure of the market and see how even in world shaking news events, an event that's impacting the whole world, on the markets, people saying, no, it's chaos, what do? We don't know what to do. If you understand the language of the market, then the market shows you what to do. The market shows the opportunities, right? And is there any questions at this stage? Right, no questions. Looks like this is not going to be such a long. Normally I have a nice lot of questions that we can go deeper into. Right, I think what I'm going to do is let's look at a couple of trades and how, without going too deep into a single method, just using the structure of the market, and including the line chart is the structure of the market without emotions. The candles represent the emotions. This spikes, the spin bars, and when we do trade, then we do need the emotions. We want to see the structure and then overlay the emotions, the candles, and that shows us exactly where to take our entries, where to put our stop losses according to the structure of the market. Structure is absolutely critical. As you can see here, what happened, the price went up. There, something happened in the price structure. It wasn't higher tops, higher bottoms anymore. It's started making lower tops and bottoms. There was a gap, so that was a bit of a dramatic one. Not a very nice wave structure here. In the second wave, still the early stage of an next trend, there would have been a good place to put your entry based on a lower bottom there. It pulls up, and as soon as it starts going down, you realize, okay, that's a lower top as well. And then if it passes past that thing and you get engaged there, then it means it's making another lower bottom, and that is the early stages of a next trend, early stages of a new downtrend. So that is one way we could have entered. And obviously the way you manage your risk is very important. I'm an advocate of what I call a high probability risk management. That means you take some profit off when the market goes in your direction, not everything, some, to make your risk less, to make the mental pressure less, and then you look for the structure of the market to continue. And when the structure changes, you take the rest of your profit. As you can see, what happened here very clearly, made a lower bottom, a top, lower top, went down. It couldn't go make another lower bottom, So when the moment that turns around, goes up, you know, if this passes that point, then it's going to be a higher top. That's the definition of a of an uptrend. So in that sense, that would have been, oops, sorry, that would have been where we put our entry when it goes past that higher or that top there, knowing that it made a higher bottom. Then it's a definition of an uptrend, and there we reached our first. We normally use the Fibonacci uh, guidelines to take our profits. Our first partial profit would have been somewhere there, and that means that we've already got not a lot of risk in this. And there it goes again. The structure changes. Um, obviously, when it goes past that point, then it actually it fails to make a higher top there. So another possible structure change, and very simply, if it then failed to go higher there, so if it goes past there, then it made a lower top, and then it's going to make a lower bottom. So there we take that trade of ours, we take the rest of we would have made a small profit there, take the rest out. That is the structural place where it couldn't make a higher top, and now it's going down, and then you had a lovely trade there. So that's what I mean when I say so many times, what we technical traders do is we stay in the ebb and the flow of the market. The market ebbs and flows. You can see it very, very nicely when you put it on the line chart. When you simplify it, take the emotions out. But when you trade, you do need to see the emotions. But still, the structure, that ebb and flow of the market is absolutely beautiful. So even in times of crisis, it gives opportunities. What is very interesting for me as an observation is that this trading, you have a computer, you have internet, you have access to, to the charts. Is what we call a fourth industrial revolution business. That means we utilize the internet, we utilize technology, and you can be anywhere in the world. As long as you've got internet, then you can trade. You can you can look at the structure, you can take calculated risks, you can manage that risk. And if you know what you're doing, then over a series of trades, it's possible to make a net profit. That is a business, right? You generate income. So that is called that is one of the businesses of the fourth industrial revolution. The fourth industrial revolution, very quickly. What is the fourth one? Why is it the fourth one? The first industrial revolution, and a revolution in this sense is very simply just a change, a revolute when something revolves, it changes. So it's a change when a change happens, right? So the first economic revolution was steam engines. People were using animals. When steam engines was invented, it changed the way businesses and industries and so on worked. Optimized, and more possibilities was created. The second one was electricity. When factories could use electricity, it caused a massive change in the world and the way businesses work. Right, in the speed of things, mass production was possible. This third industrial revolution is computers. The way we process information got much faster than previously, and that again caused a major change in the way we do business all over the world. Now, in a couple of years back, I think 7, 8, 9 years back, the Charles Schwab, the time chairman of the World Economic Forum, wrote a book, The Fourth Industrial Revolution, and he said that the fact that computers are now so prevalent in the world, so many businesses are using them because it's obvious, it gives you an edge, it helps you to lower your overheads. And the internet is becoming mature, and the two is being combined. Now you can do things over the web. For instance, a very good example is Uber, a taxi company that don't own taxis. They just through the app, through the internet, they enable people that have a car, that have cars to to become to become a taxi, in the sense of they can coordinate people that need a lift to them, and absolutely exploded. It's very easy. The overrates are lower. The normal taxi companies find it very difficult to to compete with that because of the lower overheads, because of it actually being a better service. You can call a guy to you anytime. You can even get quotes for different companies. So the older companies have difficulty, their overheads are higher, and they also have to change or else they're out, right? So in a sense of that they can't compete anymore. So, and if there's less clients, then your cash flow starts becoming difficult. All over training changed because of Skype and the way like I'm doing here now. Technically speaking, anybody in the world can just log onto the webinar and listen. We don't have to travel to the place anymore. It's a traditional training. People all changed their ways, all started incorporating technology. So this changes the economy or to change the way people do business very, very drastically. And this is emphasized by the coronavirus in the sense of people are asked to stay at home for quarantine purposes. If your business was already fourth industrial revolution, you could just simply go stay at home and to continue with your business. You had an income you can generate. If it was an older type business or other type business, then you couldn't open your shop and buy and sell your things, and then you can't generate an income, and it has an immediate effect, especially if you're a smaller and medium businesses, immediate effect on your pocket, on your net profit. So unfortunately, a lot of those smaller medium businesses have to let some of their workers go because they just simply don't have the money to pay them, right? So so my idea is that, or what people are speculating is, the opinion is that this whole coronavirus is going to give the whole fourth industrial revolution, the importance of the fourth industrial revolution, a major boost. And lots of companies are going to realize they need to do this to be able to survive in times to come. We don't know when this might happen again, but it's not only the crisis itself, it's the fact that you manage your overheads better. For instance, if there's a business and there's a lot of office workers and they can send half the office workers home and only rent half the office space, then it makes the overheads much lower, and it makes them possible for them to survive. All right. So I've been talking, but let's look at another couple of markets as well. So we've looked at the NASDAQ, the S&P, and we've looked at the Euro USD. So look at have you got any preferences? Oh, he's left. Right. Okay, I don't think this is gonna make sense to go on. So yeah, thank you for attending, and I'm closing off this webinar. And if there is any, since this is going to be recorded, let's just go back to the webinar. If there is anybody that has questions, if you listen afterwards, if you have opinions, if you have questions, if you understand what I mean and how I demonstrated the structure of the market, then you are welcome to email me and we can discuss it. And that is what I do. I train people to see the structure of the market, to take a calculated risk, to manage that risk. And then it becomes highly possible to make a net profit over a series of trades. That is what traders do. They stay in the ebb and the flow of the market. And that is why I call that three things, I call it a solid foundation. You understand, you listen to the market, you work through all those fears that people struggle with, the fear of missing out, the fear of being wrong, the fear of losing, the fear of leaving profit on the table. Those things disappear when you start respecting the structure of the market and you realize we just listen. When the structure changes, we take a calculated risk and we manage that risk. And then it can become almost effortless. It become actually boring because you know where you can, you know what you're waiting for. You know where you're going to put your entry. You know where you're going to protect your account if the structure changes, your stop loss, and you know where you're going to take your profit. I always like take profits. The first one is taking partial profit to manage your risk, so your mental pressure is lower. your stress is low, it's easy to let the trade go, to let the market structure do its thing. Second one is your salary, then you know you've got a net profit in your pocket. And the third one is a bonus. So if you are interested in that, then contact me and then we can talk further. Right. Thank you for listening and goodbye.